Hi everyone, I'm Reni, and today we are here with another episode of our LemFi series for newcomers in Canada. Today we are diving into something that literally affects every single person in Canada, and that is taxes. They always say that two things are certain in this world: death and taxes, and that is very true. I know it's not the most exciting topic, but the Canadian tax system is absolutely crucial for your financial success here. So let's get into this video. By the end of this video, my hope is that you will understand exactly how taxes work in Canada, the different types of taxes that we are charged in Canada, and also what gets taken from your paycheck when you get paid from your employer. So let's get into it. Let me introduce you to the sponsor for today's episode, LemFi. Remember when sending money home felt like navigating a maze? There were endless fees, slow transfers, and constant stress all the time. Now we have LemFi. It's an app that just gets it. You can send money to Nigeria, Kenya, or any of 10 African countries, and it's easy as sending a text. So make sure you use my code, which is xoReni, and you will get $10 off when you send a transfer of $100 or more. Thank you, LemFi, for partnering with me on this series, and now let's get into the video. So first things first, in Canada, taxes are collected at different levels of government. So let me break down each of those for you. The first level is federal taxes. This is collected by the CRA, which is the Canada Revenue Agency, and federal taxes are used to fund national programs, meaning across the country programs. For example, defense, immigration, and some federal benefits that you get. The next one is provincial or territorial taxes. So as we all know, in Canada, we have provinces and we have territories, and each of those provinces and territories charge taxes. The rates do vary by province, but these fund things like your healthcare, your education, and other things like provincial roads as well. Lastly, we have municipal taxes. These are taxes based on your municipality, meaning your city, your town, your village, wherever you live, there are taxes on that level as well. These include property taxes for local services, and your money goes to fund parks, garbage collection, and local transit. So those are the three levels of government that we have here, and as you can see, each of those levels charges taxes. Unlike some countries where taxes are built into prices or collected separately, in Canada, taxes are taken out based on the type of tax that you are being charged. So let me explain 4 of the most common taxes that you will face. Number 1, income tax. So income tax is tax that you pay on your earnings, either from self-employment or employment, and this is usually deducted directly from your paycheck. So if you are somebody who receives a paycheck from your 9-to-5 job, you will have income taxes that are taken out. And a bit later on in the video, I'll explain what all the taxes that are taken out mean. The second type of tax that you will encounter is called sales tax. So this is tax that is added to purchases that you make at the checkout. So let's say you go to a store and you buy some clothes, there you're going to add tax on top of your purchase. And these taxes are called GST, HST, or PST, and that all depends on the province that you are in. So GST is goods and services tax, HST is harmonized sales tax, and PST is provincial sales tax. So that all depends on the province that you are in. And again, it is not included in the price tag. If you see something that's $9.99 at the store, they're going to add tax on top of that $9.99 once you get to the checkout. The third type of tax that we have is property tax, and this is tax that you are charged when you own a home. And these are taxes that are typically paid annually, or they're just added to your mortgage payments and you can pay them monthly. The last type of tax that I'll mention, and of course there are probably other taxes that are not in this video, but the last type of tax that I'll mention is capital gains tax. And this is for someone who's investing. You are taxed on your investment profits, and you pay this tax once you sell your investment. So who actually collects this tax from us? That would be these people that we all know and hates or love, depending on who you are. This would be known as the CRA, also known as the Canada Revenue Agency. The CRA is basically the Canadian equivalent of the IRS that we have in the US, or HMRC that we have in the UK. Let me know in the comments below, from the country that you previously lived in, what is the tax body called in your country? Let me know in the comments. So yeah, the CRA is our tax collectors, and they definitely take their jobs very seriously. You don't really want to mess with them. Now I want to dive a little bit deeper into income tax. This is the biggest tax that most newcomers are going to deal with. In Canada, we use what's called a progressive tax system, which means that we have marginal tax rates. I know that probably sounded like a lot of jargon, so let me break this down into simple and easy to understand terms. First, your income is divided into what we call brackets, and each bracket that you have is taxed at a different rate. And only the money in each bracket gets taxed at that bracket's rate. So in some countries there's a flat rate. Let's say they charge 10% taxes on whatever money that you make, whether you make $10,000 a year or $100,000, they charge the same amount. But as I said, in Canada, we have what is called a progressive tax system, meaning that you are taxed based on the specific tax bracket that you fall into. So let's use an actual example, and let me give you the numbers for 2025. So for 2025, here's what the federal tax brackets look like for all of us who live here in Canada. Remember, these are up to date as of now, but you can always go on the CRA website to get the most up-to-date version. I will have a chart on the screen over here. For the 15% category, it's up to $57K that you make. And then we have the 20.5%, the 26%, the 29% category, and we also have the 33% category if you make over $250,000 in Canada. So when you see this, a lot of people say, oh no, I don't want to make more than the $57K or accept a raise that will pay me more because then I'll be taxed more. But that is not how it works. Let's use an example. If you make $60,000, you're not going to pay 20.5% on your entire income. If you make $60,000, the first $57K is taxed at 15%, and the remaining $2,600 will be taxed at the 20.5%. So the total federal tax that you would pay on a salary of $60,000 is around $9,144, which is only about 15.24% of your total income. So you can see that it is wise and advisable to always make more money because you're only charged based on how much money is in that new bracket that you are entering into. So yes, you work, and then the government of Canada taxes you $9,144. To me, it's not that bad considering all of the benefits that you do get. For example, healthcare, emergency care, roads, school, etc., etc. But that is not all. There is more tax that we are charged. When it comes to income tax, you also have to pay a provincial tax, and of course this depends on where you live in Canada. So there are a bunch of different provincial tax rates for 2025 across the different provinces, and I will just leave that on the screen for you. So what will you pay in income tax for the year? You will pay whatever your federal tax rate is plus your provincial tax rate, and that is what you will give to the CRA every single year. Again, I realize that these numbers may seem very high, especially if you're coming from a country where this just isn't a thing, but remember, these taxes help to fund our systems that you will eventually benefit from by living here. Now, the biggest jump scare for most people is when they get their first Canadian paycheck. And you might be shocked at the difference between your gross pay, which is what you have before taxes, and your net pay, which is what actually comes into your bank account. So let me share it with you now as you're watching this so you're not too shocked when you get your first pay stub. So here is a sample pay stub that you will see. As you can see, we have the employee's name, the pay period, the pay dates, and then we can see how much deductions were taken out of their salary. So they got paid $1,530, but CPP came out. CPP is the Canada Pension Plan, and this is a retirement benefit program that your employer is mandated to take out of your paycheck every single month. So this money is getting taken out whether you like it or not. It will be put into your pension so that when you retire, you will have some income that is coming towards you. Next, you can see that we have EI. So EI is employment insurance. If you're someone who loses your job, you are provided with temporary financial support until you can find a new job, which is a great benefit that we have here in Canada. I will say, if you have not been paying into EI for a very long time, it won't last very long because it is only based on how much you have actually paid into EI as well. And then we can see the federal tax that's taken out and your provincial income tax that is taken out of your paycheck. At the end of the day, Funke had $403 of deductions that were taken out of her paycheck, and that leaves her with a net pay of $1,127. So she may cry a bit when she sees this pay stub, but remember, everything is going towards a pretty good cause. So some other possible deductions that you may see that weren't included would be health benefits, union dues, group retirement plans, long-term disability insurance. Basically, it depends from employer to employer, but those are some that you may also see coming out of your paycheck. Now let's dive a little bit deeper into sales tax. This is the tax that you're going to see every single day in Canada. So as I mentioned earlier, the price tag never includes tax. The tax is added when you get to the checkout. And different provinces have different systems. The GST, the PST, the HST. It really depends on where you're based. So remember, it's important to always factor in the price of tax when you are budgeting for items. And some items are GST exempt, but you will know that based on where you are shopping. Next, let's dive a little bit deeper into property tax. And again, this is the type of tax that you only face if you own your own home. Property taxes are the taxes that homeowners in Canada pay on the what we call assessed value of their home. And this money is paid to a city or the municipality that you live in. So if you buy a home in Toronto, you will be paying property tax to the city of Toronto. Right now, they typically vary. It can go anywhere from 0.5% of the value to 2.5% of the home's assessed value. So yes, even if you buy your first home, you've paid off that home, you have zero mortgage, there is still a bill that you will be paying every single year to the government. My property taxes right now are around $3,000 a year, which is considered pretty low actually. The last type of tax that I'll mention is capital gains tax. So this is for those who are taking it a step further and they're actually building their wealth via investments. Yes, you are making money via investments, but you do have to pay some taxes on that money, unfortunately. Capital gains tax is a tax on profits that you make from selling a certain type of asset. For example, if you own stocks, if you own bonds, if you own real estate, or any other investments, they will tax you on the growth that you have. So if you buy a stock for $100, it grows to $125, you will pay tax on that $25 that you have made. But there are ways around this. So in the next video, I'll talk about how you can avoid paying this tax in a legal manner as soon as you start to build wealth. So I know taxes can seem a bit overwhelming, especially because you're now in a new country, but trust me, they're actually pretty straightforward once you understand the basics. And remember, I know it's easy to feel resentful towards taxes, but I really think we should reframe our mindset. They fund our public services that you all will have access to, and you should definitely take advantage of. So if you have any questions about taxes, please leave them in the comment section below and let me know what the most shocking tax that you've ever encountered is. I think property taxes is the most shocking one I've encountered, but I'd love to know what yours is. Don't forget to subscribe to the channel and check out LemFi for your international money needs. Thanks for listening. Bye.